CountryWide Connect with Andy Thompson and Sarah Perriam-Lamp.
All right, welcome back to the show. Great to have you with us. Love to hear from you. Send us an email. connect@country-wide.co.nz is our email address. Joining us now to break down BNZ's latest rural wrap is BNZ senior economist Doug Steele. While the New Zealand's primary sector exports have remained exceptionally strong over the past 18 months, a complex web of geopolitical uncertainty, cost inflation, El Nino risks, and shifting interest rates is shaping what comes next for primary producers. In their latest report entitled Buoyant But at Risk, they outline what the next 12 months could look like. Doug, g'day mate, welcome to the show. Thanks so much for your time. I looked at that headline, Buoyant But at Risk. That kind of underwrites it, doesn't it?
Yeah, g'day, Andy. Good to come on the show. It does, but let's start with the positives because there is certainly plenty of them across the major sectors in the New Zealand agricultural space at the moment. That export return from dairy, beef, lamb, kiwi fruit, all going very well in the past season. The numbers are quite staggering. You look at just the last 12 months, export returns for the agri sector up about 5 billion. 5 billion, let that sink in. And you think once that's sunk in, up 2 years ago, we're up $11.6 billion. It's a lot of juice coming into the economy, and it's certainly helping the regions and the sector.
Doug, I had a good look at this report, and if anyone's listening to this and they want to get it, obviously this would be on the BNZ website, I'd imagine, would be the place to find it. There's
Certainly
some
is.
fascinating, and I love a good graph. I love a good executive summary, and I love a good graph. What struck me on your main page there is you had New Zealand primary exports. In 1990, they were at $10 billion. Here in 2026, they're at just shy of $60 billion. That is a massive, massive growth, isn't it? In that sort of 40 odd years. That's huge.
It is huge. Yeah, we're just nudging 57 billion if you can squint your eyes at the chart, Andy.
Yep.
But it's a massive number, and as I just suggested there, we're up in a couple of years 11.6 billion higher. That return, driven by generally strong prices for the likes of sheep, beef, dairy, kiwi fruit, as well as strong volumes. We've just had a massive dairy season in terms of milk production, kiwi fruit volume strong, and those meat returns are really good. It is a lot of money coming in, and that has helped the economy when general economic conditions have been clearly quite soft.
Again, loving a good graph. New Zealand beef exports to the UK, I think, just underwrites what you've spoken about. And you have a look at this. It's one of those graphs, a hockey stick, where it goes along at very low levels for quite some time. And then in the past year and a half with the FTA, it just rockets up to close to 500 million. That just shows the importance of those markets, but also illustrates, I think, the growth, doesn't it? And the dollars that are coming in.
Yeah, and I think it absolutely highlights the benefits of these free trade agreements. They take ages to get into, to get negotiated and get into place, and for it to actually show up, by which time people have often forgotten about the fact that we've signed one. And then you look at a chart like that and you see a massive increase in exports. So in this case, it's beef to the UK, and that's still restricted by quota, but those quotas are lifting each year, and we're seeing year-on-year growth. In fact, in the last 12 months, we've nearly tripled our beef exports to the UK, and it looks like there's more coming given the free trade agreement and the increase in quotas that are going to come through in the years ahead.
Doug, I want to talk about some of the risks because we know there are risks and there's issues there. But the buoyant side of it, are you picking that these positive trends continue with growth? I mean, this exceptional growth in the past 2 years obviously is off the back of coming out of COVID. We've got the new FTA with with England. We've got the UK. We've got the one with Europe. We've got obviously the China one. Are we going to see more growth, or are we going to start to see a little bit of a tailing off, do you think?
Yeah, I mean, I think the thing that's remarkable at the moment is if you think, look around the world and look at the risks and the what's happening in the Middle East and the Ukraine, these things are, obviously a frontline headline news, but actually we're doing quite well in the export space. I think that's actually quite remarkable. The thing is, we know these these things can be cyclical in agriculture, and to say that the commodity cycle is dead would be a bit foolish, I think. So chances are we'll probably come down the other side a little bit. I think even in dairy at the moment, if you look at global dairy trade auction prices, they're about 10% off there, off from a year ago. So I'd say dairy prices right here and now are probably good rather than great. But then if you're looking at $9 something for milk price to farmers, then that's still a pretty good payout. And likewise in sheep and beef, I think prices are likely to come down next season, I think, on average. But if you look at it on an inflation adjusted basis, I still think they'll be above average. So still good returns. I think the big risk for it, especially in the lamb side of things, is the weather. And you look at that El Nino indicators, and they're just off the charts. In fact, I think they're it's looking like it could be as bad as 1982, 83, long time ago. But if you look at the Hawke's Bay papers at that time, people were talking a lot of dry and a lot of wind drying out pastures. So that El Nino risk really needs to be taken seriously.
I couldn't agree more. And Doug, you and I are both of a vintage where I can actually remember 1982, 83. I was still at school at that time, and I was living in Nelson, and we got absolutely smashed that year. It was the most horrendous. Well, it was a beautiful summer if you were doing anything other than farming, but the drought was it was bad. And I can actually remember back to one worse, which was 72, 73. When I was a kid, and that was horrendous. And I think I'm hearing farmers talking about it and going, "Oh, we'll just wait and see." No, you don't wait and see for this one. Absolutely, make some precautions now. The weather's one risk. Geopolitics is another risk, and uh, again, things outside of our control, Doug. But they're serious, aren't they? We don't know what's happening.
Yeah, and the situation in the Middle East, let's be frank, it's completely unforecastable. There was a deal, and prices for oil and fertilizer come off in international markets. Oil prices got to about $120, and then suddenly they're down to about 70 within the space of not long. And the next minute the hostilities starting up again, and we're rocking back to $100. And as we sit today, right now, about $90 a barrel, but by the time people listen to it, it could well be different.
Yeah.
Just the uncertainty around the situation in the Middle East and influence on prices that matter for us in terms of diesel and fertilizer prices up well double digit in domestic prices. This is lifting the cost structure, and I think the idea that it just all settled down, that's what the futures market says, but there's no guarantee that that's going to happen, and or when.
Interesting, that one. The futures market, we don't fully understand that. I think it's a little bit like voodoo to me. I don't take a lot of notice of it. I can only deal with the here and now. Speaking of here and now, though, one I am interested in is the trade and the is what we're getting from the US, particularly some of the tariffs. How serious are they, Doug? Because it strikes me that a 10% or 12.5% tariff is it's not that bad. It seems like the Americans or the consumers are wearing it, but it's also like even like a currency fluctuation can make it either go away or make it twice as bad, right? How bad are those tariffs, or how much should we be worried about them?
I think it's actually the uncertainty of trade policy itself that's the biggest issue. The latest change in July from the US lifting our tariffs from 10 to 12 and a half, that's annoying and unhelpful. It very much depends on market. The likes of beef is excluded, kiwi fruit's excluded. But if you're selling into the US, someone like the wine industry, and your margins are already thin, then another 2.5% tightening is going to hurt a lot more than if you're looking at, say, the beef side of things where prices are sky high. And the bigger issue is, what's going to happen next? Where are these things going, and how will other countries retaliate, and that sort of stuff? It is a drag on economic growth globally. But as you say, there is so many other factors going on, and I think of the US beef example. They've basically stopped cattle exports from Mexico, but they're looking at introducing them or allowing them back in towards the end of this month. And then you've got the likes of Brazil and Australia running into quota limits, selling beef into China. more of that's going to the US. So starting to see US beef prices come down. These trade issues they can seriously change markets very, very quickly. But on the positive side, as we talked about earlier, the trade agreements that were put in place, we are starting to see fruits from them, and certainly that beef into the UK is a really good example of it.
Yeah. The other one, just quickly before we go, inflation and interest rates. Now, we know inflation is rising. We've seen the costs. We've seen that. The Reserve Bank talking about that. Interest rates, though, is something which farmers can't, or they can manage them. What's the projection? What are you looking at there? Just a bit more of a risk, or anything serious we should be worried about?
Yeah, the Reserve Bank lifted the cash rate up to 2.5% in July. So they're underway of taking away some of the monetary stimulus that has been in place. We think their interest rates are likely to push higher in terms of that cash rate. The next meeting's in early September. We think they'll lift another 25 basis points. There is a bit of political uncertainty around, and maybe there's some sort of lull in the economy as we get into this election period. But I think the general picture for interest rates is up, and we have seen that in term rates as well push higher this year as markets have built in the likelihood that the cash rate is going to push up. That's seen the likes of your 2 and 3 year rates push up already. A bit of influence from overseas as well, as those longer term rates in the US have pushed up. So it's not set in stone though. It all depends on where inflation in the economy evolves from here. So it's worth keeping an eye on.
Yeah, we are keeping a very close eye on that. And the dollar is a little bit softer as well, particularly against the US. So that is hedging and helping us a little bit as well. So, Doug Steele, really appreciate your time on the show, mate. Thanks so much. We will chat again.
Thanks, Andy. Cheers.
All right, that is Doug Steele, their senior economist at the BNZ. Great to have him, and that report is on the BNZ website, BNZ Research Rural Wrap.
CountryWide Connect with Andy Thompson and Sarah Lapp.